Hey, it's Mark Simone here for Sean Hannity. Normally, I'm on our big flagship station in New York, 710 WOR, where the Hannity Show is every afternoon. And we got a lot to get to. We got a great guest for you. Let me see who it is. Oh, actually, it is a great guest. See? How about that? It actually is. No, it's Anthony Esposito runs one of the best funds, hedge fund investment companies in the world. He's the founder and CEO of Ascalon 6 Capital and knows more about the economy than anybody. Anthony Esposito, how you doing?
Hey, Mark. How are you? Nice to be here.
We've had an incredible year in the stock market, and I think, can we say it's going to hit 50,000 in the next few weeks?
Yeah, I wouldn't bet against the Dow Jones at 50,000 at this point. Everything seems to be lined up with momentum as a tailwind. Yeah, I think we could get there. I'm not thrilled with market valuations right now, but I do see in the near term there's really no reason to think that the market's going to slow down in the coming month, 2 months for sure.
So when you say a little overvalued, it's not like a bubble waiting to burst, is it?
I think we are at actually historic levels of overvaluation. If I may put it that way. The one metric that I watch very closely, and I am a technical analyst, so I run a managed futures fund here at Ascalon 6 Capital, and that is all technically driven and rule-based. We are top-down, so we're not looking at the fundamentals that most bottom-up stock pickers would look at. That said, if you look at the inflation-adjusted, the cyclically adjusted PE ratio on the S&P 500, the Shiller PE, we're actually approaching levels that we last saw at the end of the tech bubble in 99 into 2000. So we are well extended as far as valuations go if you look at them on a cyclically adjusted basis.
Yeah, I know people like to compare to the internet bubble back then, but that was overvalued by preposterous percentages. We're not that bad here, are we?
I think if you look at it, you could make a case that we are.
The
problem I see, so really, broad stroke, the problem I see with the equities market is this. We have valuations at all-time highs. We have market breadth, very condensed. It's very concentrated in very few names. So as we hear about, the AI trade or the Mag 7, the Mag 7 is making up, somewhere between 40 and 45% of the S&P move on a daily basis. So if you're attributing 40 to 45% of an index that has 500 names in it to only 7 names, that tells you that those 7 names actually are a risk, right? Because if that 1 or 2 story breaks, the entire index is being held up by that, and it could fall pretty quickly, which we've already seen, and we saw it at the end of last year as the questions came in about NVIDIA and the AI trade. So I think market breadth is bad. I think valuations are pretty high. I think momentum and trend in the near term is good. So on a technical basis, if you look at the market, we have more upside. If you start to look out at the longer term technicals, we're starting to see the work that we do here at Ascalon 6. We are starting to see some cooling down in the coming quarters. But for the near term, meaning the next 1 to 3 months, I certainly see a reason why the market would continue to go higher. Whether or not that makes sense to me doesn't really matter. I just want to be on the right side of the trade and make my investors money.
Yeah, okay, but the 7 big tech companies driving the market, all right, I understand that, but the other smaller, lesser companies, don't they have a big upside coming because you're going to have more manufacturing here, you're going to have lower taxes, you're going to have there's potential for real growth there, isn't there?
I think what we're seeing is Trump's agenda actually starting to take form. And yes, we're seeing real growth. You could look at the GDP numbers today, and these are fantastic numbers. As the GDP is up 4.3%, which no one expected, that's a great number in and of itself. What's even better, to your point, is government purchases are actually on an annualized basis negative 2.7% versus plus 2.1% under Biden. So what am I saying? I'm saying that we're seeing GDP growth where those companies you're talking about are actually a part of the growth, private industry, not being funded by taxpayer dollars or by the government. So there's a big shift here. Net exports, another positive in the GDP report. So for 2 quarters now, net exports have been a real plus to GDP, which means that we're exporting much more than we were previously. That's very good for production. That's very good for manufacturing. It's very good for private growth in the country.
Yeah, also, you're talking about the government driving the economy. As far as job growth, isn't it mostly now private sector job growth instead of government jobs under Biden?
Mark, I'll give you one better. So that's a great point. Government payrolls are actually the lowest now than they've been in a decade. And they've been falling off a cliff since President Trump took office, which is a huge positive. Because remember, we're funding those with tax dollars and debt. And what does that do? Well, first of all, it's fake growth, fake jobs. And second of all, it's inflationary. If we're printing dollars and using tax dollars to pay for people that may or may not really have a function or may or may not be needed, that's actually inflationary. So we're seeing more private growth in jobs, and that private growth in jobs is going to native-born Americans for the first time on balance in 5 years. For the 4 years of the Biden administration, since the COVID low, native-born Americans were net negative as far as job growth. And just in the last 12 months, native-born Americans have gained 2.6 million jobs. In fact, the November number for native-born Americans' employment was the best on record. So we're seeing a shift away from government jobs to private jobs, and we're seeing native-born Americans get those private jobs. That's exactly where we want to be. So there are positives fundamentally with the economy. There's no question. Now, how will the market discount that? And how quickly will we see that flow into earnings and flow into expectations, and how will that affect valuations and investment? That's the million-dollar question, and that's what we try and figure out each day.
Yeah. Anthony Esposito, CEO of Ascalon 6 Capital. What about AI? A lot of people are worried, as great as it is, that it's going to take over jobs and put 50 million people out of work in the next few years. What about that?
I honestly don't know how many people will be removed from their jobs because of AI or not. There's obviously a place for it. It's obviously very powerful. I don't know what that looks like as far as employment, and I don't know what it looks like as far as what new jobs are created because of AI. We saw the same thing with the 99-2000 bubble and the internet and just the proliferation of technology, where it seemed like people were just going to be being laid off and cut across the board, and there was somewhat of a shifting of skill set versus just an unemployment rate spiking above. So I think AI has a place. I think there will be jobs that are lost. There's no question. I mean, I traded for 17 years on the floor of the stock exchange before I shifted to the hedge fund buy side, and I essentially lost my job because of technology. We went from a auction-based market on the floor of the exchange in person on paper, and it went to a fragmented market that was driven by technology and dark pools and regional exchanges and Archipelago and NASDAQ, and all those things shifted. So technology is here to stay, whether it's AI, whether it's market structure, whether it's the internet. It's going to continue to evolve, and we'll see jobs shift and jobs be lost and jobs be gained. So I think on balance, we'll probably end up, as a broad stroke job market, we'll end up in the same spot with the same essential unemployment rate in the country.
Yeah. All right, Anthony Esposito, we're not clients, but maybe you can give us a free tip or two. Give us a sector that's going to take off, or a sector we should be looking at.
Right now, as far as what we're seeing here, I was out with a very strong gold call last December. I know it seems like it's late in the game at this point as we have gold at 44.91, but down around the 2,600 level, I was made a very strong call in gold. We've seen a great move in gold, a great move in silver that I believe still has legs and still has a tailwind. And I do think that on the equity side, we trade the S&P 500 futures and the Russell 2000 futures here. I think we have some upside, but I would be pretty cautious as we start to lose momentum on the upside. I think we have potential for a real move down, a significant move down in the coming 2 to 3 quarters.
Yeah. All right. Well, Anthony Esposito, great stuff. His company, he's the founder, the CEO, Ascalon 6 Capital. People can become customers, right?
Absolutely. We're actually open for new investors now. I can be reached at anthony.esposito@ascalon6capital.com, and the 6 in there is actually Roman numeral VI. Or you can reach me at CMT_Anthony on X. I'm out there each day with a brief market note and some commentary. Very happy to have the conversation. Very happy to meet new partners and discuss the fund.
Excellent. Great work. Keep it up. Thanks for being with us.
Thank you, sir. Thank you, Mark, so much. Have a very Merry Christmas and a Happy New Year.
All right. Take care. Sounds very honest. He doesn't have that Jordan
I like
Belfort,
'em.
salesman kind of.
It's rare to hear somebody that actually knows their stuff and doesn't feel like they're selling you, bill of goods there. Smart guy.
not like those guys at 4 a.m. on TV. You can invest right now. You can
Oh,
remember.
please. He's way above those guys.
Way above. We got a lot to get to. We'll get to affordability. Speaking of, also we'll get to Hunter Biden. What the hell is this guy up to now? He's bashing Biden. Hunter is bashing the Biden administration. We'll see if we can figure out why coming up. We'll take some calls. 1-800-941-SEAN is the number. It's Mark Simone here for Sean Hannity.